Welcome back to the deep dive. Today, we're really digging into Taman Tun Dr Ismail, TTDI, here in Kuala Lumpur. It's this area that everyone knows for being quite prestigious, but maybe surprisingly, it's also shown real resilience in the property market.
It certainly has.
So our mission today is to kind of unpack what's behind that enduring appeal, look at where it might be heading, and figure out how it fits into the bigger Malaysian property picture.
Yeah, and what we found digging into the research is fascinating. TTDI isn't just one single market.
Right.
It's more like two very distinct paths, you could say, for investors or people looking for a place to live.
Exactly. We've got some facts here that might actually surprise you and definitely some key takeaways. So let's dive in.
Let's do it.
Okay, so if you've been keeping an eye on the Malaysian economy, there are some, headwinds, wouldn't you say?
Yeah.
On the surface, things look a bit challenging.
They do, yeah. The macroeconomic picture is complex. We're looking at persistent inflation, for one thing.
The forecast is pretty high, maybe 7.5 to 8% in 2025, still around 6% in 2026.
Wow, okay.
And that's, quite a bit higher than the central bank's target of 5%. So what that generally means is restrictive monetary policy stays in place.
Meaning interest rates stay up.
Exactly.
Yeah.
Borrowing costs remain elevated. Think mortgages, business loans, that sort of thing.
Okay.
Then on the other side, you've got government spending, what they call expansionary fiscal policy. That could widen the deficit maybe to 3.1% of GDP next year.
Right.
And just generally the economy seems to be moderating a bit, and investment as a slice of the GDP pie has been sort of shrinking long term. So yeah, mixed signals for sure.
Okay. That's a fairly challenging economic backdrop you've laid out. So given all that, how is the property market, especially somewhere prime like TTDI, actually holding up so well? It seems counterintuitive, right?
It really does. It's a fascinating paradox. Because despite all those pressures you mentioned, the national property sector overall has recovered pretty well since the pandemic.
We saw transaction volumes and values pick up nicely in Q3 2023. And if you look just at KL, the numbers are quite strong. Residential deals, up 5.5% year-on-year in number of units.
And the value.
That jumped significantly up 16.6% year-on-year, hitting RM 17.46 billion in 2024.
Yeah.
Even commercial property in the wider KL area, transactions were up almost 49% in the first half of 2024.
That's huge.
It is. And you see developers, big names like Sony Darby Properties, Sunjuria, they're reporting solid results. They've got strong unbilled sales, which gives them good visibility on future earnings.
So what's actually propping it up then?
Well, a few key things are helping. Government policies, definitely. Like the stamp duty exemption for first-time buyers.
Right.
And the changes to the MM2H program, Malaysia My Second Home, were probably the biggest long-term driver. Infrastructure.
The transport links.
Exactly. MRT, LRT lines. Especially the LRT3, which should be finished in the second half of 2025.
Yep.
It's a big one. But what's really interesting, as you said, is this contrast. You've got this macroeconomic caution, but then boom, robust property performance. Yeah. It strongly suggests people are seeing high-quality real estate as, well, a safe haven asset, something durable, a hedge against inflation.
Especially the high net worth individuals.
Precisely. For HNWIs, prime real estate like in TTDI isn't just a home. It's a tangible investment that tends to hold its value or even grow when other things might be shaky. They're the ones pushing up transaction values in these top spots.
And we're seeing developers react too, aren't we? Shifting focus more towards high-rise living and industrial stuff. Is that about squeezing more value from the land, managing costs?
That's exactly it. It's a smart, pragmatic move to adapt to the current climate while still meeting that underlying demand.
All right, let's pivot then. Let's leave the big picture for a moment and really zero in on TTDI itself. What is it about this specific place that makes it so resilient? Why does it seem almost immune to some of those headwinds?
Well, TTDI's value isn't based on, the latest fad.
Yeah.
It's built on really solid, deep-rooted fundamentals. First off, connectivity. It's just brilliant.
Right.
You're right next to major highways, the LDP, the Sprint Highway. Getting to PJ or KL city center is easy. Plus, you got the TTDI MRT station right there on the Kajang line.
And feeder buses, too.
And an efficient feeder bus system. So it's incredibly well connected, both by road and public transport.
Okay, what else?
Second, the amenities and, crucially, the green spaces. TTDI is famous for its large parks. 3 big ones, really well kept. That's quite rare in urban KL.
Definitely.
You've got the community center with a library, sports stuff, convenient shops in TTDI Plaza, and you're super close to One Utama Shopping Center. Everything's nearby.
Convenience is key.
Absolutely. And finally, I'd say it's a community itself. It's a mature township,
Yes.
fully developed, and has this strong reputation for being safe, friendly, very family-oriented. The planning was smart, too, keeping the busy commercial streets separate from the quieter residential ones. It preserves that peaceful feel. These aren't just features. They're why people put down roots and stay for generations.
So it's really that combination of factors, connectivity, green space, amenities, community feel, that has kind of insulated TTDI from market swings and created this really consistent demand. It's quite something how places can build that sort of loyalty over decades, isn't it?
It really is. It becomes more than just houses. It's a lifestyle people buy into.
Okay, now here's where the TTDI story gets, I think, really interesting, because it's not just one single market, is it? You've got the classic landed houses and then this growing high-rise sector. And the data shows they perform very differently as investments.
Oh, completely different beasts. If you look at the landed properties, those typical two-story terraces, they are the absolute gold standard if you're looking for capital growth.
The prices just keep climbing.
Pretty consistently, yeah. Average prices went up 5.3% year on year, hitting RM 1.6 million in Q4 2024. The median price people actually paid between April 24 and March 25 was RM 1.625 million.
Just think about that for a second. Someone bought a house there back in the 70s for, what, less than 100,000 ringgit?
Easily.
And now it's worth well over 1.5 million. That's phenomenal long-term growth.
It truly is. But, and this is the trade-off, the rental yields on these landed places are modest.
Right. Not great income generators.
Typically around 2.3, maybe 2.4%. And average rents can bounce around a bit, up one quarter, down the next. So it's really about that capital appreciation.
Okay, then what about the high-rises, the condos?
That's a rapidly growing segment, offering a different proposition. The average price per square foot is around RM 672, but it does vary between different condo projects.
It's 3 TTDI?
Yeah, 3 TTDI is a good example. Its median price jumped nearly 12% year on year to RM 540,000. And the rental market for these high-rises, it's booming.
Who's renting them?
Attracting well-off tenants, expats, local professionals. And the key difference here, rental yields are much, much better, hovering around 4.6% overall for condos. Sri PDI actually improved its yield to 4.8% in 2024.
So significantly higher than the landed property.
Oh, yes. Much higher income potential. So this really spells out the two main investment approaches in TTDI. Landed is overwhelmingly about long-term capital growth. They're like legacy assets.
Things you hold on to for decades, passed down maybe?
Exactly. The lower rental yield is just accepted because the capital growth is so strong and consistent.
And you mentioned scarcity for landed homes. That has to be a huge factor. It's a mature area. They aren't building many new ones, right?
Yeah, virtually none. New supply is almost zero, but demand just keeps coming. Remember that NASA TTDI project, Zaba Residences?
Yeah.
They had only 135 units available. They received over 3,000 expressions of interest.
3,000 for 135 spots. Wow.
It just shows you the incredible demand for that limited stock. So the high-rise segment offers a more balanced approach, you could say. Better cash flow from rent.
And it appeals to different people.
Yeah, younger professionals, maybe expats, people who can't quite stretch to a landed house yet. The entry points are more accessible too, starting around RM 540K up to maybe RM at 1850K or more.
Okay, so if new development inside TTDI is so rare, particularly for landed, what does that mean for its future influence? Surely it spills over into nearby areas. You've picked out 5 key upcoming projects around TTDI, launching from 2025 to 2028, that you think will kind of reshape the edges of this area.
That's the idea, yeah. These projects aren't in TTDI proper, but they're close enough to be influenced by it and, in turn, influence the wider ecosystem. We chose them based on proximity, developer reputation, project scale, and how they align with future trends, things like sustainability, being near transit, smart home tech.
Right.